Hey everyone, my name's Josh, and in today's video, I'm going to tell you how I started a portfolio using free money I got from credit card churning, bank account churning, cashback rewards, and from a few free stocks I got from signing up with WeBull. So stay tuned and I will explain what I'm doing. So you're probably thinking to yourself, why would anybody start a portfolio and broadcast it live on YouTube? Well, the reason why I'm doing it is because every time I talk to somebody about investing, it seems like they're like,
oh, I don't have enough money to do that. Oh, that's only for rich people, da da da.
Well, the truth of it is, it isn't for rich people. In fact, it may be the opposite. It may be more for people that don't have a lot of money that really need to multiply whatever kind of money they got. So I wanted to show people that even if you don't have money, if you really look for ways to get money, there is free money out there. As crazy as that sounds, it might take just a little bit of effort for a lot of reward. I'm not telling you to do this, I'm just showing you it is possible. So anybody with any kind of incentive to invest money can find money if they really want. You can either work extra to get it, you can do credit card promotions, you can do bank account promotions, you can use your cash back you get from credit cards, from using it on normal everyday spending. There's all kinds of ways. So what I did, New Year's Eve, the market was only open for half a day. So I really wanted to get this investment portfolio going so I can show it on my YouTube channel. So I was thinking to myself,
how could I multiply my money the fastest with the least amount of risk?
I thought, hey, why not do my top choice blue chip stocks for this? So in my WeBull account, I put $300 in it. So the $300 came from when I opened up a Chase checking account. In fact, I made a YouTube video about it. You can click this card and check it out. So that's where that $300 came from. And in my M1 Finance account, I got $100 simply from referring somebody to the Chase Freedom Card. And that was $100 and I put it in there. Right now, M1 Finance is the only investing app that offers fractional shares. Robinhood's going to get it in the future, but not right now. So I took that $100, put it in M1 Finance. In my Robinhood account, I put $200 in it. The $200 came from, 150 of it came from cashback rewards from opening up the card as a promotion. I had to spend so much in so many months to get it. I think it's only like $500 in 3 months, something really simple. So I took that $150, put it in my Robinhood account, and then the remaining $50 I got from my simple everyday spending cashback rewards. So I bought one full share of Apple stock using my WeBull app. I bought a fraction of Amazon using M1 Finance, only $100 because I got a $100 referral bonus from a credit card. And then I took $150 I got from cashback rewards from signing up with a credit card, and I bought a share of Microsoft with that. If you want to subscribe to this channel and follow along with my investment portfolio, feel free, and go ahead and like this video if you found any kind of value from it. I know what some of you guys are thinking.
Dude, everyone says never put all your money in the stock market. Are you insane?
So in this case, since it's free money, obviously I'm willing to risk a little bit more with it. And not to mention, if you look at the history of the stock market, there's never been a 10-year period where anyone's ever lost money. I'm going to go over why I picked those three stocks. For one, Apple. Apple is very innovative. They're always coming up with new ideas. They're always trying to outperform their competitors. And I love Apple products. I got a MacBook, I got an iPhone, and I've tried a couple other Apple products. My wife, she uses the Apple Watch. So I am a consumer of Apple and I love them and I know they do good work. That's why I chose Apple. And not to mention, they have a ton of capital, so I know they can weather a strong recession or economic downturn. My second choice was Microsoft. I use Microsoft products. We have an Xbox. My little girl loves it. Heck, I even like playing Call of Duty sometimes. So I ain't gonna lie to you about that. And that's why I chose Microsoft. My third choice was Amazon. And the reason why I chose Amazon is I use Amazon almost every day in some way, shape, or form. We are Amazon Prime members, so we have the Amazon Music, we have Amazon Prime on the TV. We use the subscribe and save so we get a fraction of our groceries using Amazon. And if we need any kind of product, the first place we look is Amazon. So I know Amazon is a strong contender in today's market. In fact, I think with Amazon, I think we're just seeing the beginning of Amazon. I think we're just breaking the surface of what they can do. They have their fingers in almost everything. That's why I decided I am investing something in Amazon. So once I get some more free money, my fourth pick's going to be Google. The reason why I think Google's going to be a very good contender in the future is simply because Google is amazing. People use Google all the time. YouTube is Google. Google search is obviously Google. Google TV, there's Google this, Google that. I use Google every day. There was this article published this past July by CNBC that mentioned that Apple, Amazon, Microsoft, and Google are teaming up to better keep track of your healthcare records and make it more accessible to people mobilely. With that in mind, that's why I think these four stocks are going to be a huge contender in the future in the stock market. So I'm going to go put
My money on me some Apple, Amazon, Microsoft, and Google.
So with this free money portfolio, this is not trading. I'm not day trading. I'm not doing any kind of swing trading. This is investing, people. Do not day trade, do not swing trade, do not try to time the market. This is buy and hold investing. I'm not going to be selling this stuff in the next week, month, year, 2 year, 3 year. This is something I'm holding for 10, 20, 30, 40 years. So I'm just going to hold it for a long period of time. And with that being said, it's probably not a bad idea to put this stuff in a Roth IRA somewhere. But just to start out with a little bit of money, I'm not too worried about right now, but I probably will be doing that in the future once I get more free money from credit card churning, bank account churning, and referral bonuses. When is the best time to invest in stocks? Well, there's only two good times to invest in stocks. One time would have been 20 years ago. That would have been great, right? And the second best time is right now. And I say that because you don't know if right now is a high point or a low point. No one knows. Right now, Apple's at like $290. So who's to say a year from now the sucker ain't up $400 or $500? And on the flip side, who's to say it'll be down to $150 or not? No one knows. No one knows. I don't care who you are, what you do for a living. No one knows what the stock market, real estate market, bond market, no one knows what it's going to do. So don't try to time the market. It's not going to happen. So I want to go through real quick, just show you the charts on the past 5 years of Amazon, Apple, and Microsoft. Using my WeBull app, let's look at the chart. So from 5 years ago, Amazon's up 570%. Again, don't get excited about these gains. I'm just showing you historically, this sucker's been growing like crazy. All right, if you look at this Apple chart, Apple in the past 5 years has went up 150%. So again, it's not going to be guaranteed you're going to go up another 150% in the next 5 years, but the sucker is growing. Let's take a look at Microsoft. So Microsoft 5 years ago was only about $48. Now it's up to about $158. That is about a 240% gain looking at the charts. So why are charts somewhat important to look at? Well, let's think about it like this. What's the best way to predict the future? Look at the past. So the chart is simply a graph of the past prices of a stock. It's really important if you're thinking about buying a single stock to look at that chart. If you're a long-term investor, the chart isn't super important, but it's fairly important to take a look at because you're going to make good judgment if you have good information. So my personal thoughts are, if you want to invest and you don't have very much money to buy real estate or anything like that, the stock market's definitely not a bad idea. And if you want to get started, you can use any one of those apps I mentioned. Just use the link in the description below. A lot of them, you don't need any money to start other than M1 Finance. You need $100, I think, to open up an account there. So these are my 3 stocks I believe in. If you're thinking about getting into stocks and buying individual stocks, I'd recommend you go with companies you use and believe in, so that way you know what kind of changes are going on to companies and stuff like that. Because nothing's worse with investing than not being informed or staying informed with your investments. Every one of my investments I always keep a close eye on and all that type of stuff. So that's just my words of wisdom. And I want to thank you guys for watching this video. So I'm going to end this video how I end every video. It ain't the actual dollar amount we're after. We're after the freedom and how we can provide for our families with the money. See you in the next video.